So a lot of clients are asking if this is the right time to enter the equity markets and to buy this proverbial dip. And so our attitude is long term it will be, but we're cautious investors. As people know in the financial advisory community, you're buying SkyBridge to be that diversifying buffer and that non-correlated asset. So we're always way more cautious about the equity markets than typical hedge fund managers. Having said that, if you're looking at forward earnings are very uncertain right now. And so what SkyBridge would be recommending is let's wait and see what consensus numbers look like in the next 3 or 4 weeks, and then we can evaluate whether or not the valuations are appropriate in the markets. I think one of the reasons why the markets are trading so sloppy, some people were over leveraged, some people had a tremendous amount of inventory in stocks because they had such a great year in 2019. They were expecting another very robust year in 2020, and this sort of black swan event took place, which has knocked people on their rocker. So that's why you're seeing this aggressive volatility. So for us, we would be cautious here, probably wait another 4 to 6 weeks before entering the equity markets aggressively. So it's very hard to have the right economic rationale and visibility on earnings to be whole hog in the equity markets right now. We've taken very sharp opinions of investment grade and high yield bonds over the last couple of years, and we've stated in almost every one of our investment letters that we're cautious and concerned about where spreads are in the investment grade market and the high yield market. And now you know with the oil prices dropping as quickly as they did, it's created major stress in both investment grade debt in the energy market and a high yielding debt in the energy market. And so that creates an opportunity for SkyBridge. And so you'll see us start to make investments now that things are down sort of 10, 20, 30% and spreads have widened a little bit. That's a perfect opportunity for SkyBridge. And so you'll watch our portfolio rotate into those areas. And so after saying for maybe 12 or 18 months, those areas of the market were too expensive for us and too risky. The pricing now seems that it's an advantage to a group like SkyBridge to be buying into this sort of weakness. And so look for us to be doing things like that. There are pockets, certainly in the energy sector, where we see value, but the overall market is still historically, it's not overpriced, but it's certainly not underpriced. We'd like to see another 10 or 15% correction in the stock market to get the forward PE. You know, we're discounting earnings right now, but we sort of think that the market's trading at about 15.5 times earnings. And this is sort of, a mid-March estimate based on what's going on. And so if that market was sort of 12 times earnings or 13 times earnings in a zero interest rate environment, that would make the overall market very attractively priced. But for us right now, sectors that have been really hurt, like energy, would be an example of where there's real pockets of undervaluation and sort of high upside with relatively low risk, but we're still, in general, not sanguine about the equity markets here. If you map out this pandemic, even if you look at the worst case scenario, the 1918 Spanish flu, we see us recovering and coming out of this thing sort of in, latest 9 months, but sort of, let's say, 4 to 6 months. And that'll be good because there'll be a tremendous amount of pent-up demand in the system. And so that could increase consumption and get people, sort of the animal spirits in the economy, working again. So we're not super concerned about that like we would be in past economic cycles. We see this pandemic more as a shock to the system than a fundamental destruction of the system.
All investments are subject to risk, including the possible loss of the money you invest. For more information about SkyBridge Multi-Advisor Hedge Fund Portfolios Series G and the SkyBridge G2 Fund, call 1-888-759-2730 to obtain a prospectus. Investment objectives, risks, charges, expenses, and other important information about a fund are contained in the prospectus. Read and consider it carefully before investing. This webcast is for educational purposes only. We recommend that you consult a professional advisor about your individual situation.